So once again, this market reeling into a weekend, and this ahead of that big Fed rate hike we expect next week. Remember last Friday's close? I keep bringing this up because it was so awful. I actually last weekend was thinking about a Black Monday situation. It was not an easy weekend. This may not be much better, even though I know it's a good thing, folks, right, to wring out the excess and to shake out the weekends. Obviously, I've been around for a while. I know that's a good thing, but what's the message of this market right now? Like, what exactly is it trying to tell us, and what should we be hearing? I want to bring in Kingsview Wealth Management CIO Scott Martin. And Scott, before we even talk about next week, let me just talk a little bit about this week. I think you were long Netflix. I think you had sold Amazon. Just your thoughts on those and some of these other big tech names that reported this week.
Oh, man. How much time do we have? I think I need a therapist after all this. And it's just not, at the end of the day, it's not even come yet, to your point, Charles. We did try to bottom fish on Netflix. I'm still going to keep bottom fishing because I just think it's overdone. We sold Amazon way higher for some of our portfolios.
Right.
And we're talking like 3,300, which is awesome. Man, Facebook was a surprise, which was great. So we have some of that, and not as much as we used to. So here's the takeaway, and you've been talking about this all show. And I like how a lot of your guests put it. I think Bob Dahl put it this way as well. He's like, it depends on your risk horizon or your risk tolerance and horizon. I mean, there's a lot of reasons, Charles, to be scared if you're in tech right now, if you've got a short horizon, meaning like something under a year. That's frightening. Now, that could still work out. But if you're like a lot of our investors, and even like myself, I've got some spare cash. Our investors have spare cash, our clients, and we're using these pullbacks even today. Feels scary to pick up things like Tesla, maybe some pipelines, maybe some Chevron. I'll even probably fish towards the end of the day here at 3 o'clock Central and just find some more stuff that's getting just really pounded for no reason other than the fact that it's just amidst a sell-off.
I like that part, though, the no reason part, right? I mean, you look at these companies that beat on the top line, beat on the bottom line. They're expanding margins, they're taking market share, and they give strong guidance. When they're down in a market like this, I think those most times, 8 out of 10, they're a gift.
I agree. And I tell you, what's funny about saying for no reason, it's like the reason is that everything else is down. Like you're right. There's no reason. And here's the other thing I'll say about where the market is just in general. There's no reason. Like, are you kidding me? There's no reason. We know every reason the market's going down, and the market should have too. That's what's kind of the weirdest thing. I talked to you about this last Friday, man. Like, what's weird about the trade, though, is we're belly aching about interest rates. We're all scared, bootless, I almost said something else, about inflation, and we're worried about a slowdown. What? Like, we've been talking about this for 6 months. The Fed is engineering all this stuff, and the market's deciding to sell off by, what, 15%, over the last few months. That's a little scary to me because it might mean something else is coming.
Right.
But if it isn't, this is a great opportunity, an opportunity of the last few years, frankly, similar to 2020 March.
Yeah, you always worry about what you don't know because there is a point when the market can react to what the knowns are, even if the knowns are harsh, to your point. One thing I think that could help is right now, because of earnings season, companies are in what they call a blackout period. But the buybacks are going to come back. I mean, just this month alone, we heard 200 billion buybacks announced, Apple 90 billion, Amazon 52 billion, ExxonMobil tripled theirs to 30 billion. Does that help you? I mean, do you want to own these kind of stocks when you got that kind of firepower behind them?
Yeah, I mean, it's nice to see them convicted in their own name. I think that's good when executives are buying stock and not selling it, too. The weird thing is, though, Charles, in this market, in this psychology, that gets announced in earnings and the market doesn't even care. Like, you'll even see, like, you'll talk about it because you're just so kind of devout into stocks. But you look at the other networks, because I watch our enemies sometimes, and it's like they don't even talk about it because the stock's not even taken into consideration, so they don't talk about it. And so, or even in articles, they'll mention it one line, and then that'll be it. So my point is on that is it's the psychology of the market that, to your point, you should take advantage of those buybacks because then when the market starts rallying and those names start performing, somebody's going to come out in like 3 months and be like, oh, wait, on their last earnings report, they're buying back 200 billion of stock. That must be it. And it's like, no, you knew that 3 months ago. You ignored it because you got lost in the psychology and you missed out. So a good point, and I think that's something to keep in mind when you're looking at names here.
So next week, let's handicap the Fed here. Right now, and I haven't crunched numbers, I haven't done much other than just a Wall Street experience. I feel like we could be in one of those, situations where we know what's going to happen. And to your point, we know it, but we're still getting hammered because of it. But when it does happen, it's the counterintuitive move happens. In other words, the Fed hikes by 50 basis points, and I see a big rally on the same day. What do you see?
I say the same thing, except I think there's 250 basis point hikes, May and June. I think June's the one, because I think to your point that you made with one of the other guests today, June becomes the next meeting. I don't think it's May, but the next meeting becomes when they turn tail, and they're like, all right, inflation is starting to slow down, demand is starting to fall back, we're starting to get into an economic slowdown, et cetera, et cetera. Consumers being affected, rates are going up, housing, blah, blah, blah. They're going to be like, we're going to take maybe a pause, and we're going to start being very careful about how we proceed from here. The 10-year's pulling back, so like, and just in the open market. So they already see that this is starting to work. So that, I agree with you 100%. I just say the move is June, not May, because it feels like it's too quick for that. Yeah.
Right. And so you mentioned earlier you were buying, and you'll probably buy something at the close. What are you going to buy? What are you looking to buy here at the close?
Oh, man, I wish I could tell you. I keep those secrets very close to the vest.
What sector are you looking at?
Well, I'll tell you, man. I mean, I'm probably going to pick up something in the probably something more in the discretionary space. I mean, Booking.com looks pretty good. We own that already, but we got to probably pick up some more of that for our investors. TMO is one we own, Charles. It's been great the last few days. Costco, there's just stuff, man, that if you look at the charts, there's kind of a little of a cup and handle type thing, and it's doing this little round out, and it breaks a low, and then closes above the open, and then it starts to turn, and then you turn the stochastics up, and you're kind of off to the races, of course, until it turns down again, which could be Monday.
Yeah.
The point is, there is stuff that's turning, and those three names are ones I'm looking at.
Yeah. No, I love all three of those names as well. Thank you so much, my friend.
See ya.
All right. Join me now on the phone. We got